I'm Charlotte McLeod with the Investing News Network, and here today with me is Randy Smallwood, President and CEO of Wheaton Precious Metals. Thanks so much for being here with me online.
Charlotte, a pleasure to connect with you. It's too bad it's not face-to-face, but this will have to do.
Yes, we're making do. So let's start off by talking about Wheaton Precious Metals Q1 results, which came out recently. Before we jump into the numbers, I wondered if you could give me a brief sense of how the company has been impacted by COVID-19 over the last few months.
Well, we had several operations, mainly in Peru and Mexico, that were suspended operations at the request of each of the federal governments there. So our second, third, and fourth largest operations, that being Peñasquito, Antamina, and San Dimas, all shut down early in April and have now. It looks to me like they're on a path to restart. Mexico has opened up the path to restarting these operations over the course of the rest of this month of May, so should be up and running by the end of May. And we're getting the same noise out of Peru, same signals out of Peru. It looks like it's going to start up. So you know, the partners have put in policies and procedures, physical distancing protocol, testing, getting rid of, limiting travel and getting rid of non-essential staff at the operations. It's the same applications, same processes that we've seen at all of our existing other operations around the world. And so, you know, the impact will largely be on a production basis in our second quarter, and then probably bleed through into our sales and therefore cash flows into our third quarter. Mainly because we've got about a 3-month or close to a 3-month inventory of produced but not yet delivered, and that will sort of fill in the deficit of sales during the second quarter. But I think overall probably about a 30% drop in production for a 2-month period here in the second quarter, and ramping back up, and that's over 2 months, which effectively means 20% over 3 months in that second quarter. Which overall, we did have to relax our guidance, but I'm going to guess as long as we don't have any other breakouts or any other challenges over the next while, that it'll probably be about a 5% impact on overall production for the year.
Right, I've heard a lot of people say that Q2 is when the numbers will really start to reflect what happened. And it sounds like you can already even now have a pretty good sense of what's coming and prepare for that.
Yeah, it's again, what we've seen is really strong signals out of both Mexico and Peru in terms of restarting the operations, and so I do fully expect to see production resuming at all of those sites by the end of May, and so given that, the math is pretty easy to calculate from there. There is more of a silver bias to it, which means that we're going to be a stronger gold production. It's actually impacting and deferring out silver, and of course with recent silver trends, that's actually proving, or silver pricing trends, the commodity price itself, that may prove to be a positive. This deferred silver production from the second quarter looks like it'll be now sold at even a higher price here during the rest of this quarter and coming down the rest of the year.
Okay, right. And so going back to your Q1 results, where we are right now, I did notice silver came in quite a bit higher year on year in Q1. Can you comment on that? And I guess overall in your expected metals mix for the rest of the year, what you can know right now?
Sure. Peñasquito is hitting it out of the park. We've been saying it for a while. We know that the best grades of that ore body, the highest grade zones of that ore body are going to be mined over the next 3 to 4 years. And so we're going to see some spectacular silver grades and to Newmont's credit, and also some strong gold grades. And so it's going to be a very, very significant precious metals producer for Newmont. And of course, we get 25% of whatever silver is produced at Peñasquito. So we're going to see that benefit. And it really did well over the first quarter. So it's what kicked our silver up. But even with that, we still have good, strong gold production from, of course, Salobo, our flagship asset. And then we're seeing good gold production from other assets. San Dimas continues to deliver well. Our stream there is a bit of a unique one because we are exposed half silver, half gold, but we get paid in gold ounces. And so it's classed as a gold stream for us just because the compensation is delivered in gold ounces. So we're good. We're going to see some good growth. I would say that we're probably 60 to 65% gold and about 30 to 35% silver and about 5% palladium for the rest of this year.
Okay, and you mentioned some of the potential benefits of a higher silver price down the line. What about the higher gold price that we're seeing right now? Is that having any impact?
Well, of course it is. One of the beauties of the streaming business model is that our operating costs don't change when the commodity price goes up. Our operating costs are fixed, and so that gain in precious metal prices, whether it's gold, whether it's silver, gets delivered directly back to our shareholders through the cash flows and ultimately through the dividend and through share price appreciation. So we are seeing some very strong precious metal markets, and of course our equity is performing well in reflection of, first off, the strength of our business model, second off, the quality of the assets and the growth that we have on a go-forward basis. These are very good times to be in the gold business.
Yeah, I know not everybody likes to make price predictions, but any sense on where we could be going down the road in 2020?
Well, I've always said that whenever it comes to predicting the price of precious metals, you have to, the first and most important factor is get a sense of the strength of the US dollar, because that is what we measure our precious metals in. I have to tell you, the amount of quantitative easing, during the last global financial crisis back in 2008, 2009, 2010, it when we talked about quantitative easing, it was always measured in billions. This time round, it's measured in trillions. There's a lot of billions in trillions, and so I am incredibly bullish on precious metals as a store of value, as a safe place to invest. I think that what's going to have to happen, the true economic impact of this pandemic that we've seen around the world, isn't fully measured yet, and the amount of stimulus that is going to be required just to try and get back, and I'm not even sure we will be able to get back, because I do think that consumer trends have changed as a result of this, and there's not going to be anywhere near the same level of demand as there has been historically. And so, but to try and get back, just to try and drive the economies back to where we were prior to this pandemic, is going to require a lot of quantitative easing, so to speak, a lot of money printing from every fiat currency in the world, and so I think that's there's no better time to be in precious metals. I don't have any problem envisioning gold over $2,000 an ounce. Some very respected institutions around the world, including major banks, are now predicting gold up at $3,000 an ounce and higher. And so longer term, I don't have any problem envisioning that, but even in the near term, $2,000 an ounce is not out of reach. I'm actually more excited about silver, because silver has lagged. But as we start seeing the retail investor, the generalist, stepping back into the precious metal space, which we are truly seeing now over the last couple of months, and especially over the last couple of weeks, silver will outperform, and especially because the fundamentals behind it in terms of the consumption, the industrial demand, the high efficiency electronics, has even made less silver available for those institutions, or those retail investors, those generalists, when they come into play. And so I think maybe some of what we're seeing this week in silver is now rolling forward. So I'm very optimistic on silver prices. I'm also very optimistic on gold prices.
Yeah, definitely those higher numbers are starting to sound much more attainable right now. I have one more Q1 question. I know that in light of COVID-19, Wheaton Precious Metals created a $5 million community support and response fund. I wanted to ask you to talk a little bit about that initiative and how those funds are being deployed.
Well, it doesn't take much to realize that we in the precious metals industry are probably going to do very, we're in much better shape than so many of our neighbors. All it takes is a walk down any of the commercial streets, or a drive around, to understand the impact that's going to happen, to our neighbors and to our communities. And so we recognize that even though we've already got a very active CSR program that puts support into local communities, we just recognize that this pandemic has got some very short-term but dramatic needs in terms of dealing with people that need immediate support because they've lost their jobs and they've lost their income and their stability, and so providing that support, and to frontline workers in terms of making sure that they have proper testing equipment to minimize risk and such. And so we decided to establish a separate $5 million, hopefully a one-time event, but a $5 million US $5 million fund, with about 20% of that going to the communities where our employees live here in Vancouver and down in the Cayman Islands, but the other 80% or $4 million going to the communities around the mines that deliver us our metal. And these funds are for frontline support. It's for buying medical equipment and support testing equipment for the frontline staff. It's going to the food banks and to social advocacy agencies that are there dealing with people that are dealing with direct impacts from this pandemic right now. And it's just something that's right to do. And charity is no more important than in times like this, and there's no doubt that we are doing much better than so many of our neighbors. It's time to give some back, and so it's been well received by our partners. We've got some really exciting programs going on that are going to do a lot towards these communities around, really to our neighbors, which is what it's all about. The right thing to do.
That's great to hear. I'm going to switch gears a little bit and ask you a question about royalty and streaming companies in general right now. So investors, I think, always hear that they're a safe bet compared to typical mining stocks because they've got a more diversified asset base. Would you say that still stays true during an event like the coronavirus when you're working with so many companies that may have been impacted by these events? What's your perspective on that?
Well, the diversified asset base is definitely a real strength in terms of streaming company versus so many of the operations out there. But I think where the real strength comes from is the fact that our operating costs are defined and fixed, and our capital costs are also defined and fixed. And so we're not going to run into issues where we have sustaining capital requirements, and if we see a downward tick in commodity prices, a stressed balance sheet. Our margins are very high, and because we have scheduled capital that runs out, the real benefit to shareholders, to investors in the precious metal space from a streaming company is the fact that you get full exposure to the commodity price and to the expansion and exploration potential, but you don't get the cost risk that comes with a traditional mining company investment. And that's the real key thing. No capital cost risk, no operating cost risk. You know what our costs are going to be. They're predictable on a go-forward basis, both on the capital and operating side. And so knowing that, we can make sure that we always maintain a good, strong balance sheet. We're constantly on the prowl, looking for new opportunities to continue growing our business. And so, that is, to me, the real difference between streaming companies and traditional operators is that you don't get the cost risk, but you get all the positives. And in fact, I would argue that, again, because of that fixed cost operating basis, we deliver all of the upside, whenever we see precious metal prices climb, that all gets delivered right back to our shareholders.
Okay, that's a very clear explanation. That's helpful.
Thanks.
Because you mentioned being on the prowl all the time, just as a side note, is this a good time for you to be making acquisitions? And I mostly ask that because we've seen so many mergers and acquisitions in the general mining space this week. Are you also looking right now?
Yeah, most of our opportunity set actually comes from the base metal space.
Right.
Again, our business is purchasing precious metal, one core precious metal byproduct from base metal operations. That's where we deliver the best value and the most value to our partners. And so we go to these copper mines, these lead zinc mines, and these nickel mines, and we try and buy their byproduct gold and silver and platinum and palladium. And if you look at the base metal space, especially with the impacts of this pandemic, the demand side for base metals has taken a hit, and we've seen commodity prices of copper and lead and zinc and nickel all drop as a result of this pandemic, which is just going to cause a greater need. It's going to stress some balance sheets. It's going to cause a greater need for capital from other sources for these base metal companies. And so we're very bullish on the opportunity set. In fact, we've already had some activity in terms of companies approaching us to look for additional sources of funding and capital as we go forward. And so we were fortunate in that we got a couple of site visits in before international travel was restricted. And so we're continuing to work through that. Pretty excited about the opportunities that we have in front of us. There's some good sized opportunities and very, very high quality. But yeah, our objective is to continue growing the company and put this cash flow back to work We've got lots of capacity. The balance sheet is strong. Net debt is around $600 million. The interest rate on that debt is now approaching 2%, and so it's getting cheaper and cheaper all the time. I think it's going to continue dropping as we see governments trying to stimulate growth around the world. And so, we've got lots of capacity, well over $1 billion in capacity to push back into the ground.
Okay, just as we close out, are there any other catalysts that you would mention for Wheaton Precious Metals as we head into the rest of the year?
Well, we've got a real strong organic growth profile coming in. And as I mentioned, really good, strong results expected over the next few years from Peñasquito, Salobo, the phase 3 expansion going on, a 50% increase in throughput capacity. That should be delivering more gold production to us by 2022, 2023. We've got continued growth at the Constancia project with the Pampacancha zone coming on stream sometime, maybe possibly by the end of this year, if not early next year, with good, strong growth in gold production. We've got Stillwater continuing to try to fully optimize their, utilize the capacity that they have at both their East Boulder and Stillwater mills. We've got a cobalt stream that starts delivering us cobalt by January 1st of next year. First Majestic continues to deliver improving results and exploration success down at the San Dimas mine, which will continue to deliver growth for us on a go-forward basis. We've got great optionality in the Rosemont project with Hudbay down in Arizona, and the Pascua-Lama project, which is truly a world-class gold ore body. Barrick is definitely spending time on it. So the portfolio is good and strong, and we're also very busy on the corporate development front. And so I just really reinforce our company is in great shape. It's stronger than it's ever been, and we've got some good, strong growth coming forward. So these are going to be exciting times over the next few years.
Okay, perfect. I think we can leave it there. Thanks so much for joining me. Once again, I'm Charlotte McLeod with the Invest in East Network, and this is Randy Smallwood with Wheaton Precious Metals.